Welcome to Think Twice, where we do the math. Today we're discussing an important question every business owner faces. Should I register a private company, Pty, or run as a sole proprietor? Let's do the math. Starting a small business is hard. You need to consider records, credibility, liability and taxes. Let's take a closer look at these. A private company has higher credibility due to having a registration number, separate bank account and tax number. This structure is sometimes preferred by funders. Both sole proprietorships and private companies are free to choose any available trading name. A private company has limited liability because it is a separate legal entity. It can have business insurance and multiple owners with shared liability. A private company is also required to produce detailed financial statements, which are submitted to tax authorities for review. The owner's personal finances are separate from the business. Let's take a look at how tax is treated. Sole proprietorships have the option to either be taxed according to individual tax table or turnover tax table. Private companies are taxed according to the company's tax rate or the small business corporation tax table or the turnover tax table. Private companies are also subject to dividends tax at 20% and the director's salary is subject to pay-as-you-earn withholding tax. Individual tax rates are on a sliding scale. There is a threshold of $95,750 and a primary rebate of $17,235. The first two tax brackets are under 27%. Company tax is at a fixed rate of 27%. In addition to this, dividends are taxed at 20% and the director's salary is also taxed according to the individual tax table. A company that qualifies as a small business corporation can use the special tax table that affords some tax relief. The first three tax brackets are under 27%. Both sole proprietorships and private companies generating less than 1 million turnover can potentially be classified as a micro business. The sliding scale turnover tax table is used for micro businesses. This time the entire table, all tax brackets, have less than 27% tax. Let's do the math. In this example, John Doe has a small business with a turnover of $500K. He requires a personal salary of $10K per month or $120K annually. The business has deductible expenses of $55K per year. Which option is better? Sole proprietorship, private company, or micro business? For the sole proprietorship, taxable income is $500,000 less $55,000 equals $445,000. Normal tax due at the 31% tax scale is $100,457. Deduct the primary rebate of $17,235 gives $83,222. So the effective tax rate is $83,222 divided by 500,000 amounting to 16.64%. John Doe's retained money is $361,778. In part 2 we'll continue with this example, showing calculations for company tax and turnover tax scenarios. Thank you for watching. Please subscribe, like and share our videos. Remember, this channel is for entertainment purposes only. Do your own math and make your own decisions.